Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January the 20th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave one is done. Topped out at 114.72. We've been grinding lower so far in what appears to be a three-wave move, I guess you could say, a 1-2 so far, working on a 3 down. To complete this wave 2, the question is, as we've been talking about for several months now, is this wave 2 ending in here and we're going to go breaking out? Or are we going to keep grinding lower and lower for months, even years, before we get even deeper? Well, the plan is at some point, right? Either we end now or we end down here or somewhere in between. Once that wave 2 is over, we would expect this to go breaking out. So just keep that in mind. But like we've been talking about since this low here, based on that price action, I didn't think that was the end. I thought we would break lower. We did. Since this low, we got a lot of chopping and overlapping price action. You don't see it on the monthly chart, but as we go over here to the charting platform, we could see this prior low over here. We got this overlapping. We've been discussing again for several weeks and even months now that this overlapping, you get a push up, a retrace, higher, you overlap, you go up, you overlap. So Emil, James, Ian, Mr. Tucson, Harold, all this looks still corrective. Corrective against what? The prior downtrend. So we broke below the Magic Fibo. We retested the Magic Fibo. We're being rejected as we had anticipated. We're more than likely going to get rejected off of that. So today's an interesting day. You take the recent swing point low up to the current high, or we're going to break that 618. It's right around that 98.40. So far, we dipped below it. We're holding at the moment. But if we start closing on this daily candle, so let me zoom that in for you so we can see this more closely on this current price action. Here's that 618 at 98.40. And we dip well below it, but we're holding above at the moment. But if that daily candle closes below that, then we have a 75% chance we're going to come down here to visit this 97.49, 70 plus would go to 97.27. Why are these important? It's the same level in which we are expecting that if we close below that, then we close below the bigger swing point low right here up to the current high. That would then say, okay, by breaking down here, we close below that 618 of the bigger move, and then all eyes would be on a 75% chance we're coming down to this 95.60, 95.08. So use my arrows, which everyone loves and adores. We got this move, that retracement initially, we hit that 618 and we bounced, but we bounced to the Magic Fibo so far to get rejected. So is this the bigger 1, 2, working on a 3, 4, 5 to get us down here to these targets? We shall see. Amen. Everybody good so far? So this was kind of the plan. This could still possibly hold. There's no rule to say it has to break down, but the writing's on the wall. We started closing below 98.40 today, which we're kind of testing that area. If we close below that, then we should go on and make a new low below that swing point low. And if we go below that swing point low, that's below the bigger move, again, 97.80. That's below 97.49 or 97.27 is below 97.80. And basically, we make a new swing point low here. The writing's on the wall. We're going to make a new swing point low below there. Got it? So let me show that one more time. This initial move up, 618 retracement, bounce. The bounce failed at a what? From the high to the low, it failed at around a 618 retracement slash Magic Fibo. So this is like your combo meal to the downside, right? Everybody remember? You get the 618 retracement, it fails at a 618, you break down, and it happens to be at a Magic Fibo, which this, in this case, adheres to that. So from that high right here to this low, the 618 was right around the Magic Fibo. So we rallied into it, we tested it, and we bounced off of it so far. And it's the Magic Fibo. So this may be a combo meal, right? Much more better deal when you get a 618 retracement. And then it's also with a Magic Fibo bounce. In this case, it's to the downside. It works both directions. We typically talk about it with a break above and a bounce and we go higher, but this is the same thing. We rally, we retrace and test it, and we fail. So look where that target is, Mr. Tucson. Down here, if we get that 1618, that's down around 93.60. That obviously would be a much lower low to get to 93.60. Now, am I guaranteeing that this decline is definitely going to get down here? Well, our original target 3 years ago was at 80. That's just kind of fitting the bill as we just grind lower and lower. But this looks good so far. Overlapping pricing, chopping, grinding, action, all that still looks corrective. Corrective against what? The prior downtrend. So this just looks like a retrace failure to continue, right? So again, hot number to watch is this 98.40. We're at 98.53. We close below 98.40. Candle body, not the wick. So you can say already, okay, we already got a wick below that target. Well, that means we're definitely coming down here. Probably the case because that's what we're looking for. But no, we need to see the candle body, not the wick, close below this 98.40. By closing below 98.40, we have a 75% chance we're going to go to 97.49, 70 plus, we go to 97.27. We get down here, that's below this 97.80. I keep repeating because it's that important. We close in this area, candle body, then it says we have a 75% chance. We're going to then go on to 95.61, which is a new swing point low. Just like the last time, we had proportions of a beautiful three-wave correction. We made a new low. And since this new low, was this a bullish breakout and reversal? Well, the overlapping price action said, nope, doesn't look like that. And even as we rallied back to the Magic Fibo, kind of said maybe when that daily starts turning back over, we're probably going to get a daily cycle down, make some new lows. So I'm still holding on, pushing, buying the dip on the euro dollar to grind higher, the pound dollar to grind higher, and of course the dollar index to go lower. But this is very important we close below 98.40, and that candle body today closes below that, it sets the tone. We're going to make a new swing point low below this. And by making a new swing point low below here, that triggers our 97.80 low right there. See it? That swing point of a 618. And if we close in this area, then bingo, all eyes are going to be on 75% chance we're going to 95.60, 70 plus we're going to 95.08. And yet again, my friends, that is another swing point low. So back to the big picture, that would mean this baby isn't done, right? And we'd have to move him lower. Everybody with me? So the bias is further downside. Even though we haven't officially closed below that 98.40 today, or the day's not over, we dipped below it and it bounced a little bit. But if we close below 98.40, that kind of sets the tone. We're en route to make a new swing point low, and we make another low. So I'm going to leave this here until price obviously breaks below this low. Then we could shift it over. So again, the plan is at some point this wave 2 will end. Are we going to get all the way down here to 80? We talked about 3+ years ago when we said we were going to top out many decade ago. And we finally did it about 3+ years ago when we topped out. I said we were due for a deep retracement. So we've been talking about this wave 2 retracement for several years. And I mentioned that it would take several years to make this correction. And is this the end? We kind of said no, even when we came down here and made that bounce. I did say at that point, the likelihood we go breaking the new highs now is extremely low probability, and the likelihood we make new lows is extremely high probability. Here we are. Now I'm saying it again. The likelihood that this is the end and we're ready to go breaking out this way is low probability, and the likelihood we break new lows below this low here, pushing further down, is a much higher probability, and that is the plan. So the euro dollar is, we're up 156 plus pips. We're in a position of authority. All we got to do is let this baby run. This is on a monthly chart. So we're expecting this little turnover to slingshot higher and higher is the plan. As the dollar index breaks down further, the euro dollar is going to go higher. Inverse relationship. What does that mean? That means whenever the dollar breaks down, the euro dollar goes up, or when the dollar index goes up, the euro dollar goes down. And why is that? The dollar index is made up of a basket of currencies, and the most predominant currency in that basket, as you well know, is the euro dollar, most commonly traded currency pair. So the bias is we started to buy these dips, and we talked about it over 3 years ago when we're down here at 0.95, that this was a great opportunity to start going long the euro dollar, because we expected this would be multiple thousands of pip retracement. We're not looking for a breakout to go and make all-time highs up here. We're just looking for a retracement to then make another push lower, but it would take years for this correction and would tally thousands of pips. So far, so good. And even on these pullbacks, talked about buying it at 102, you're up about 1,500 pips off of that bottom. And most recently, this little correction we've got now, we're up 100 and something. So we keep making pips upon pips based on this bigger correction. And then eventually, when it's over, we're going to look for a big down push to push us back toward these lows. So what are we looking at? Big picture is we're looking for, and the question is, do we actually get that far? But this A going up into this B, and then B, we should come back down in C and revisit these lows again sometime in the, could be years from now, could be into the 2030 area before we get here, but we shall see. It all depends on how long are we going to grind up here. Do we get to 125 and start turning down? Do we get up to 136 and start turning down? Do we push toward our original target from 3+ years ago? Do we get up here around 140, maybe 145 up here before we turn down? But again, it's part of a bigger A, B, C, and that's what we're looking for. Amen? I just don't think that this was the end of the move, which was a great move from 0.95 all the way to 1.9. That's 14, what is that? That's 2,000 plus pips to get up there. And is that the end? Still was a great run if it was, but I'm not convinced that this is the end and we're ready to go breaking down yet. I still think we're going to go higher. And why is that? Well, that's where we go to the charting platform. And again, we close below 98.40, which again, we're just barely above it. We need that candle body, sets the tone to go down here. Just remember this, high level overview. We break that low, highest probability we're making a new low below that prior low here. Got it? All right. So the inverse of that would be the euro dollar. And why do we believe the euro is still ready to go breaking out? Well, we've already got what we need, right? From the prior high to the low, we bounced. We above the 618, we got candle bodies, big bodies of the candle right there, closed above that 618 right there at 1746, basically 117.50. We closed above it. Several candles in this area closed above. So that even weeks back goes back into, beginning of the year and even late last year, we closed above. So Emil, all rows are still saying we're going to 119.84. 75% chance. I like those odds. That's why on these dips, I keep buying the dips, getting back in. That's why when we're down at 0.95, I bought that. And then when we did the bigger retracement to 120, 102 and bound, I bought it again. We keep talking about it. And then we keep buying the dips, and keep going. And next up is 118.40, 119.84, 120.40. So again, based on that candle back at the end of the year, early this year, we got what we're looking for to state that we need a high percentage chance we're going to go up to what? 1448, 198.14, 198, 119.84. It's a Tuesday, right? 1984, 75% chance. 70 plus percent chance we go into 120.40. Therefore, I'm going to keep riding that trade to go several hundred more pips into the neighborhood of another 150 plus to get to the first target, and basically over 300 more to get to the second target. And the next one above that would be 121.90. All right. Pound dollar, ditto. Why do we think there's more upside and the hundreds of pips? From the recent high to the recent low, and I'll stretch this out and then I'll bring in those targets for you, bring this down. But from the recent high to the low, we broke that 618, that 134.90, basically 135. So you can see that candle body right there. We closed above right there. Now use the big red cursor. That green candle body right there closed above that 618. What is that? From the recent high to the recent low, we closed above, not a wick, but a candle body. So that tells us we have a 75% chance this pound dollar is going to make a run towards 139. We have a 70 plus percent chance we're going to run basically to 140. We're at 134.60. So that's upwards of 500 plus pips to get to that. Just under 500 to that target, and over 500 to get to 140. I like it, and I'm still in it to win it. Amen. So Emil, even when you get these that close above and say, well, this is a beautiful move down and a beautiful move up, we close at 618 above that candle. It doesn't mean, the strategy doesn't mean as soon as it does that, it has to go straight up. Price never goes straight up. Sometimes they rapidly get up there. Sometimes they chop and grind and grunt and laboring rise to get up there. And sometimes you get a pullback first before you get up there. But again, remember, no matter what, still 75% chance we're going there, 70 plus we're going there. That's why I'm staying in it to win it, get to position of authority and let the thing run. Amen. And what did we talk about with the pound? Go back 3 years ago when we were down here, and I got to go to like a weekly chart, and we were down here at 103. And I made a bold statement, not a prediction. I love how everybody, the weatherman, this Tom, Dick, or Harry, and everybody and their brother, I predict this, I predict that, I predict. Well, you know my feelings on that. I leave the predictions to the prophets, and I can anticipate with the best of them, but I don't predict it. I anticipate it. That's part of the market price anticipator software. That's the game best out there, hands down, as you well know. That's why you're here. And if you're not here, you need to join us to find out. So, with that bigger picture, we're looking at a potential run to 147 off that bigger move, 147, 152 area. Are we going to eventually get there? Why not? From that high to that low, we took out the 618 long time ago, right? This is on a weekly chart. This recent high to that low, what did we do? We took out the 618 and the 786. So, Emil, not only do we have a 75% chance we go into 139 and a 70 plus, we're going up here to 140 up there. We showed you on the smaller scale. On this bigger scale, we have a 75% chance we're going to go visit 147 and a 70 plus, we're going to visit 152. Now, when you start to zoom out like that, that kind of goes, wow, I like it. We're at 134, and if we can get anywhere near 147, that's another 1,300 pips. But starting out at 103 to get up there, that's over 4,400 pips. That's how I like it. Amen? Any questions? So let's do the same with the euro. Where does that lead us? And I don't have it on the chart, but let's look at it. You put the 2.2, you come up over here, we got this high, we got this high in this area. These are going to be very close. And remember the little control key, it does this blue box, and it acts as a magnet to give you that swing point high, and you go down to the swing point low, and it'll lock it in for you. Well, the euro has done the same thing. We've closed. We got some candle bodies above here. Not only go to the 119.80 and the 120.40 target on the small scale, but look, on this bigger scale, from that high to this low, we closed above the 618 and the 786. So look at the euro. We have a 75% chance we should go visit 127. And we have a 70 plus percent chance we should go visit 130. Now, again, that's a high percentage. How long is it going to take to get from where we are up here? It could take weeks to get up to a smaller target. It could take literally months or even years to get up here. That was part of the plan when we were down here at 0.95. I said we're likely going to get a deep retracement somewhere around that 135 to 140 area. Well, what if we just go shy here and we only get to say the 130 target? From 0.95 to 130, that's still 3,500 pips. Not too shabby. Amen. But you do have ebb and flow. You get these retracements, and that's part of price action. It never, even in the strongest of uptrends, it never goes straight up. Strongest downtrends never go straight down. It's stair steps. We talk about the software cycling. So come back over here to the pride and joy of the software. And that's what this is showing. These targets are further up the food chain on this bigger picture. Yes, I think we're going to reach most of these, if not all of them. Do we get up here in that target we originally talked about 3 years ago? Well, looking at this picture from that weekly time frame, we got 127, 130. That's in the mix. That's a high probability already. We're not quite to that saying we're 75% chance we're going all the way to that 140 target, but still 127, 130 is still a nice 1300 plus pips to get up there from where we are. And from down here, we're talking that's like 3,500 pips from this original 3 year point where we said, let's start going long. Not too bad. So this is why I'm still, every opportunity we get pullbacks, I think we can go higher because the dollar is expected to break down further. As that happens, this will definitely, no ifs, no buts, no ands, no exceptions. We're going to go higher should the dollar break down. So remember my conversation from a very long time ago. If the dollar goes visiting 80 or lower, the euro dollar was going to go visiting this 140 area. No ifs, no buts, no ands. And if the dollar visits this 80 or lower, then the pound dollar was definitely going to visit. We're up over 287 pips, and we got a long way to go on that. But from the monthly view, we're talking that view up here in the stratosphere. So around that 150s up there. So what did we show you on the charting platform? Right now on the pound, we already have the nod to get up here to 147, 152. And that, my friends, is almost another 2,000 pips from where we are to get to this 70+% chance we're going to get up there. Got it? So this is why it's exciting. You rinse and repeat, rinse and repeat. And we use this formula over and over. Every time we get a point, a retracement, trend continuation. And this was a downtrend for years. Look at this thing. We've been in a downtrend for multiple years, ever since we topped out and made all-time highs around that 2007-ish. That's about when that was. 2007, close to 2008. And we've been in this downtrend. Well, this is not a reversal to go breaking new highs. That was never the plan. It's just a simple retracement. Likely we get a 50%, maybe a 618 retracement. This thing could extend upon 147, 152. Next target would be 157. We start breaking that, then we can start targeting this 161, 165, maybe 170. Amen? But this was never to break new highs. It was simply a retracement to then come back down. And as we move in toward probably the end of the decade and towards 2020, 2030, excuse me. So everybody good. Expect more upside on the pound dollar and expect more upside on the euro dollar, because that's what the targets are leading us to. And the process shows we have a high percentage we're going to go there. So back to the dailies, back to the current price action. Don't want to just entice you with the 127, 130, because that might take another year. Maybe it's in 2027. Who knows? We bounced down here in 22, and we're already 3+ years, going on 4 years of this bounce. And we made it to this point to show, even after all this time, we started to give insight that, yeah, this is a high probability target. But if it took 3 to 4 years to get there, how much longer could it take to get to the extensions? A year? Could it get there in 26? Possibly. Could it get there in 27? More likely. Could it get there in 28? Depends how long we do these corrections and how quickly the dollar drops and how fast this is going to rise. But this is still, again, extremely high probability target. When I first announced that 3+ years ago, when we had this point, we were going to look for this bounce 3+ years ago. We were looking for somewhere around a 618 type of retracement, maybe a 786, somewhere in that zone. This is typically what we see, that this is the move down. You get a retracement and a continuation back to these lows. So no, the euro was never going to bounce to go breaking all-time highs. It was simply a retracement before another push down. Got it? Kind of like one of these. You get these beautiful retracements that are thousands of pips, and then you come back down. So that was the plan, and it's still the plan, and no reason to give up on it. So that's why I kept adamantly saying, get to your position of authority on this. We typically use the daily cycles, and back when we got that signal here, we got in, made some pips, got pipped out on that pullback, got back in, made some pips, and here we are, up 290 and counting. I like it. And that's thousands of pips from this original bounce from 103. We went up to 137 up here. That is what? 3,400 pips from the low. Over 3,000 plus pips on that move. And look at how long we've been correcting since that. Now we're ready for this thing to go blasting off even higher. And the great news is, again, I keep showing this, that, yeah, are we going to get there? That was the pound, so here's the pound. Again, we're not expecting this to go making all-time highs. We're expecting a nice retracement off of the high to the low. We're expecting more upside. And as you drill down, and we were showing you on this latest move, just this mechanism right here, that high to that low, took out the 618, took out the 786. That's screaming we should go visit 147.50, and 70 plus we go to 152.35. And again, that's still a few thousand pips higher and multiple thousands off of this 103. So if we ultimately get up to 152, 153 from 103, what is that? That is 5,000 pips. Kind of what we whet your appetite 3+ years ago. But remember, when we talked about it, I said it is going to take years for us to potentially get up there. And we're still spot on with further upside on the bigger picture and on the smaller picture. So the bigger picture is this high that occurred back in May of 21, right? 2021 right there. And to this low, which occurred back in September of 22, we took the 618,786 out. So 147.50, 75% chance. I like the odds. 70 plus percent, 152. I like the odds. And yes, it took 3+ years, almost 4 years, as we get into in the fall of this year. It'll be 4 years since this bounce. And we still got maybe longer. Maybe we're up here in the fall. We'll see. But that's why I keep buying the dips and continuation on the bigger picture. I like to trade that way. I'm a trend continuation, pullback trend continuation type of trade. And that's where the 618, 786 type of trades set up beautifully over and over and over. Amen. So again, back to the software. I'm holding this position. We're in a position of authority. You can see on the higher time frames, as soon as we change time frames, it disappears, and then when it ticks again, it'll pop open. But you can see we're in a position, and we're looking for further upside, further upside, further upside. Kind of fits the mold. This could still go higher than that. So let's go back to this picture over here, and I'll show you its on-screen program. So we have a 147.50. So we could come over here in our platform and say this take profit 3. I want to move higher, so I'm going to just move that up. On-screen programming, Notice how they changed it. And then take profit 2, you can move that one up. And this take profit 1, do I want to do one of two things? And you can kind of do it along the way, or you can do it on the fly. That's what I like about it. We could set the bigger targets to that 147.50, 152. Because right now we have a 75% chance we go there, and a 70 plus we go here. Amen? Right now. So we do 147.50 and 152. So I can come back to my software and say, I want to make this take profit 3, trend line properties. I can go under parameters and I can say, I'm going to make that 152. 152. And I'm going to do it over here. Not 1.15. Let me get that out of there. 1.52. And I want to do 1.52. That's the 152, that upper target. Say OK. And it puts it at the 152 target. And I'm going to move this take profit 2 here, kind of pushed it differently. Now those are in gear. Take profit 3 at 152. Take profit 2 is going to be 147.50. So you can go in here if you want to get it exact. 147.50. 147.50. 147.50. See what we're doing? So now we have take profit 2 at 147.50, take profit 3 at 152. Does that mean we're going to stop there and end? Maybe. Or we could still go higher, but that's bigger picture. And what about my take profit 1, 136? Well, we can come back to the charting platform, and that was the bigger move. Well, let's go to the daily and look at this smaller move. So you zoom in. This is the fun part. And we can look at this move right here, which is from the high to this low on the smaller scale. We already took the 618 out. So we have 75% chance we're going to go up to 139. A 70 plus, we go to 140. So I can set my take profit 1 at 139. I can set it at 140. Either way. So again, it's on-screen programming. So I go back to the chart and I say, okay, I'm going to move this take profit 1 from 136. I'm going to move that up to 139. So you click it till you see the little squares on it. I got to move it out of my way here. Let me move that. So I can click on it, go to properties right there, trend line properties. That's for my take profit 1. And we're going to make that 139. Let's split the difference. 139, 140. How about 139.50? Sound reasonable? 139.50. So on the smaller scale, recent pullback off of here, we have a high percentage chance we're going to go to that 75%, 139. Basically 70 plus, we go to 140. We'll make take profit 1, 139.50. On the bigger move from this high to that low, we have that 147 and 152 target, and that's where these are further up the food chain. How's that? But that's on-screen programming. And how did we get into a lot of these trades? Remember, when we were having the daily cycle come down, we talked about buying it based on setting the trigger in advance to go ahead and get into the trade. It did so, and we got, again, pipped out. I said, get back in. Go ahead and get right back in. It's going to go higher. And now we came down, bounced off the Magic Fibo, and we're looking for more upside. Once we take the prior swing point out, we start going toward that swing point, eventually toward this one where we prior, and then we look for those extensions, and it's all set, ready to go. You just close your eyes, let this thing go. And your stop loss is in profit. You can't lose anything. This trade could tank, and it's a winning trade no matter what. And it's on-screen programming. You push the button. So if I was to push this tab right now it would go ahead and take profit one until we made 293 pips. But I want to wait in this case, in this longer term trade, because we have a 75% chance we're going to 139. Why would I want to take it now? And then later we got a much bigger chance we get on the 147.50, 152. But if you're a scalper, you may not want to wait that long. You may want to take your profits and run now. It's up to you. But I think we definitely have more upside. Fair enough? All righty. Let's continue. What about euro, yen, pound, yen? They're bouncing. We got to a position of authority. We got pipped out. We did this several times. Made a few hundred pips, got pipped out, made a few more, got pipped out, made some more, got pipped out. So, Emil, what do we do here? Eventually, this thing is going to turn. We got a monthly overbought. We got a weekly overbought. We got a daily overbought. This thing is way in overbought territory. It's exhausted. Let's go over to our Ninja Trader 8. This is available on Ninja Trader 8. You can see what this looks like on the pound yen. I'll show you the euro yen in a second. Let me move this out of the way. But the monthly software is extremely overbought territory. Eventually, it's going to turn over and start to push lower, and that's when these big corrections occur. When you start to turn over, like the last one. Doesn't look like much. It still was a few thousand pips push on that move, like 2,700 pips on that move. Doesn't look like it, but the monthly turned over. So this is why I'm anxious to continue to get to a position of authority so this thing will turn over and start moving lower. Monthly overbought. Use the big cursor. Monthly overbought. Weekly overbought. Daily overbought. And even though it did slingshot up and it's trying to climb on this daily, move this down, and it's trying to climb, it's an overbought territory. So we got a monthly overbought, a weekly overbought, and this daily is trying to engage and grind. So it's like I told you before, when these set up and you got a monthly, weekly, and daily and overbought or either oversold territory, I look to go long when they're oversold. I look to go short when they're overbought, but you got to put your battle armor on. Look at this daily. We made a few hundred pips, got pipped out. It slingshotted higher, made a few hundred pips, got pipped out, made a few hundred pips, got pipped out, made a 100 plus pips and got pipped out. It's constant, but this is eventually going to end and it's going to turn over and we're going to get a daily cycle down and maybe get a weekly cycle down and maybe even get a monthly cycle down. That's the important thing. So can't tell you what to do. No buy, sell, to hold recommendations, but this thing is setting up for a big down move. And I'm going to show you the technical picture, but just to show you that the pound yen and the euro yen look very much the same. Right? There's the euro yen. And it's ditto. Daily's kind of slingshot back up, grinding. Weekly's overbought, daily's overbought. They're all in overbought territory. Weekly's overbought, monthly's overbought. So I'm not trying to say, there's no way this euro yen could go higher than what it is. Sure, it could go a little bit more, but that's why I keep getting in these positions and get retracements, push, looking for the next one. So what can you do here? You could set the software to trigger lower off of a monthly, right? Everybody with me? So I can use the software to trigger lower on the pound yen off of that monthly. So let's see if I have a pound yen in here. If not, I'll add one. Here's a pound yen. And I'm going to go to the monthly. And I'm looking for what? So come over here, Expert Advisor, Properties. And I want to set up big numbers, 1,000, 2,000, 4,000. We know it's going to be a big number when this baby starts to turn over. And I want to set it to, all I want in this case is a trigger short. See, trigger long? No, I don't want a trigger long. We're looking for this thing to trigger short like the last time it did. It made 2,700 pips. It went up here from about 209 down to about 180, 207 to 180. That's 2,700 pips. The last time it triggered lower. Look at the one before that. We get these triggers. This one made a few thousand pips here. This one made, that was during the big correction here. That made thousands of pips. Kind of move it out your way. That was a big one here. Look at the one over here for the financial crisis. That thing made over 13,000 pips to the downside. It's massive move lower when it triggered. So what am I looking at? Even if we get a few thousand, I'll take it. So I want a trigger short, true, and that's all I'm looking for. So you see it says right there, use trade trigger short, true. Okay. And now all we got to do is click ready to trade mode, and it'll sit in this ready to trade mode. What if this thing keeps grinding higher for another month or 2 more months till it finally triggers short? What is the factor of a trigger short? The PAI hook. We call this the PAI. This is the trend momentum, or TM. And we call this the hook and the cross strategy. So when we get a PAI hook and you're in overbought territory, that's when you get a trigger. When you're oversold and the PAI hooks up, you get a trigger long. Amen? And notice when these made a nice down move, we weren't overbought up here. Not all of it. We had the red and blue up there, but green money flow right there was not. So there's no trigger. And the same here. We weren't quite overbought all the way. So even though that pushed lower, there was no trigger. See it? And then finally, we got a trigger here because it was extreme conditions, and we got the trigger and it went lower, and then we slingshotted back up, got another trigger here, and move that out the way, and we get detach that and go back. So when we got another hook there, we had a trigger. We got a hook over here, we had a trigger. We got a hook there, we had a trigger. We got a hook there. So it has to be overbought. What does that mean? Red, blue, and green have to be in this overbought territory, somewhere around this red line up here. I color code it for that reason. When it's above the red line and higher, when it starts to hook, that's a sell signal. When it's below the green line, red, blue, and green, and it hooks up, that's to go long. So right now we're in ready to trade mode on this pair, looking to go short. And we did it on a lower time frame last week, and we made a few hundred pips. We got pipped out, and on a smaller scale, but this one's setting up for the monthly, and that's the granddaddy of them all. That's the one that makes the big moves. So this baby will sit here today, tomorrow, next week, next month. What happens if I close my platform and then I reopen it over the weekend, or my computer does an update and restart? Then you're going to have to come back here to this chart and click the ready to trade button. It'll hold your settings. So if I shut this platform down and I then for the weekend, or I do some updates on my computer, this will stay in here. So all I got to do is close the computer for the weekend. It still hadn't triggered. Then you simply go ready to trade mode, and it sits in this mode until such time the criteria is met. And that is, we need this line here that's pointing up to start hooking down, and that baby will trigger lower. Got it? So I'm looking to do it off the monthly time frame. And now let's look at the charting. Why do we think that this is setting up, not only because the monthly, the weekly, and the daily are overbought, but on the technical picture? Check out what the pound yen looks like. And go back in our archives. We keep everything archived, right? For those of you. When we made a bold statement back during COVID low over here, made a bold statement. So this is the perfect time to go long the pound yen. It is expected to go up around 8,000 pips over the next few years. This is not after the fact. This was during the fact. And let's go to a weekly so you can see what I was talking about. So back during the COVID low over here, I said it's a good opportunity to go long the pound yen it is expected to go back to this swing point high and make a new high. And notice these lows down here about 123 or whatever it was at the time. And we said it would go back toward these highs, which was around 195, 23, 33, 43, 53, 63, 73, 83, 93. That's 7,000 plus pips. And I made a statement like around 8,000. And we went up to 212, which is well above that 195. So it ultimately made the 8,000 plus pips. And then we got this correction. 2,700 pip drop. When what? My monthly turned over, gave us a PAI red trigger and a hook, and it made 2,700 pips on that down trigger. Well, there was your 8,000+ pip move said back in COVID would take years to get there. Now, why is that important? Because I have a God-given talent to read and interpret price. And how does that help you? It gives you the big picture with the software. We teach you exactly what you need to know here. 13,000 pip move on that bigger correction. That's what set up COVID back in here. And then that last move was a thing of beauty when what? It corrects. Let's go to the bigger picture. It made 2,700 pips. There it is right there in that 13,000. That's percent. 2,700 pips on that down move. Well, what happened during the financial crisis? During dot-com bubble burst, the pound yen lost 9,000 pips. During the recent financial crisis of 2007, it lost over 13,000 pips. So our next financial crisis, I want to be established on the short side of this equation, because what happens when the markets are cranking, tanking, and it's all doom and gloom, the yen tends to be a safe haven. When the risk off assets are no longer risk on, it's risk off. Great opportunity to be short this pair. History has shown it makes thousands of pips. And what is looming out there? Our next financial crisis. We're going to call the Elizabeth, I'm coming to join you, honey. So if that's not enough to get you interested, knowing that monthly is set, right? Harold, we just talked about setting the pound yen we've been doing on the lower time frame, getting a few hundred pips, getting pipped out, getting a few hundred pips, get pipped out. Well, I'm doing it on the monthly chart because when you get a monthly trigger, really big things happen. And the last time we got a monthly trigger short when it turned over, that was your 2,700 pip decline. Doesn't look like it, but that's 2,700 pips. So what's the next one? Could it be 2,700? Could it be 9,000 like the one over here? Or could it be the last financial crisis that made over 13,000 pips? Well, if this turns in, Elizabeth, I'm coming to join you, honey, it's going to be way more than 2,700 pips. Got it? So now let's go in and analyze the current price action since this 2,700 pip decline. Zoom that in, give you a little bit more space in here to look at this a little bit easier. So this was that 8,000+ pip run that we got this correction. This looks impulsive, right? Just a beautiful shot down of 2,700+ pips. Since that low, yes, we broke to new highs, but look at the price action. Went up, retraced, went up. So if this is like a 1, 2, 3, look where wave 4 overlapped. That is corrective. Corrective against what? This prior down move. So since the down move, we have overlapping corrective action. Up, correct, up, overlap, up, overlap, overlap, overlap. And then we went on this run. Even during this run, we still had a lot of these overlapping moves. And even though we popped up here, this still looks more like, those of you that like wave counts and Elliott wave, etc., this looks very much like a wave A. All this overlapping, grinding, looks like a B. And likely we're going to come back down and look for the C, which would put us somewhere in that 185 to 180 area. And from 212 down to 180, that's 2,000, 3,000, 3,200 pips to get down to near 180. So if we go to there, you're still talking 2,700 pips or so to get back down here. That's a lot of pips. Amen. And if it turns into Elizabeth, I'm coming to join you, honey, this thing might turn into 10,000 pips, 11,000. Maybe we split the difference. The big one was 9,000. The big financial crisis was then 13,000, somewhere between 9 and 13. Maybe we go 11. Am I trying to guarantee we're going to get 11,000 pips down? No, but I like the odds when that trigger hits. We know we get big moves when the trigger hits, trigger hits, trigger hits. So there you go, ready to trade mode. Amen. And the euro yen's in the exact same boat. CAD yen, I'll change that one to the euro yen. So you come over here into euro yen, somewhere in here. Where's my euro yen? There it is, euro yen. So this one looks identical. Monthly overbought, weekly overbought, daily overbought territory, that is. So I'm interested in getting the monthly trigger on this one. How cool is that? So you do the same thing. You come over to Expert Advisor, Properties, and we want to set some big numbers on here. I'm looking for a multi-year trade. So I'm looking for some big numbers. So I'm just putting in some big numbers. Again, it's on-screen programming. So Harold, once we get into the trade, I can move it wherever I want it to go. I can move it, set them now, and then move it later. 4,000, just to put it on here to start. And what are we looking for? We want a trigger long. No, I'm looking for a down move. We want a trigger short. Yes. Do I want a slingshot long or any of that? No, I'm simply want a trigger short. So I put in my optimal settings, which is a trigger short. I want one of the big triggers to come in and give us the big move. And I say, okay. And we go ready to trade mode. And this baby will sit here for days, weeks, months, whatever it takes for us to get our next trigger lower. And every time we get one, we get the big move lower over time. And it takes months. This thing could take years to play out. Big picture, monthly. Just on average, a monthly cycle takes about 2 to 5 years. A weekly cycle takes about 2 to 5 months. A daily cycle takes about 2 to 5 weeks. So options traders, you can trade currencies through options or futures. There's many ways to trade this without having a Forex account. And you can do the same with options on that. And know if I'm looking for a monthly to cycle down, then I need to have leaps on this thing to go out several years. I digress, but you get the point. So I'm looking for this to play out over time. Now let's go to, I think we exhausted the Forex market. Let's go to the main markets. ES. ES has taken a dip. Kind of warned you about that. Going into the holiday, we reached the extension from the recent high to low, reached our extension, and I typically said, we're due for a retracement. I don't think this is all-time highs and this is the end of the road, but how many times did I warn you, when we get near 7,000 and we touch it, we're due for a correction. Maybe not, Elizabeth, I'm coming to join you, honey. Here comes the market crash. It could be beginning of that, but it doesn't mean it has to be now. I was just been looking for a retracement. Why? Back to the software, my friends. Stay feisty, my friends. Back to the software. So pound yen, euro, dollar yen, euro dollar, pound dollar. Still expecting those to go higher, Harold. I move these. I showed you how to use on-screen programming. You can click on these lines, not only manually move them, but if you want a specific target, you can click on the line, go to your trend line properties, and type exactly what you want the target to be. I typed in 139.50. That is it. That's based on our high-low extensions of 139.50. And then the bigger picture was the 147, 152. And again, just to reiterate, what does that come from? That comes from this correction on the euro dollar on the weekly chart. Euro weekly, just to reiterate where that's coming from, the recent high over here in 21 to the recent low in 2022, that's the targets up here. And that's the euro targets. And I was showing you the pound, same thing. From the recent high in 21 to the recent low in 22, there's the 147.50, the 152. That's where those targets come from. And that's why I changed those targets on here for long-term trade. I still expect this thing to grind. We're in a position of authority and we'll let it run. Now, why are we worried looking at the ES and we're getting this pullback? Is this the end? It's possible. Look at the recent low to the high, the 618 level. We're kind of testing it right now. This prior swing point low, even though we dipped below it, is currently holding. So this thing could go breaking out and make new highs. But if we close below this area, the door is ajar to start to look for a bigger retracement. And we're probably setting up. So if we can actually get a candle body to close below that swing point low, right? Not this rejection wick, but a candle body close below that, it sets the tone. We're going to go visit that swing point low. We close below this swing point low, we're going to the Magic Fibo. Magic Fibo is part of the software, so it comes with it. And you'll get the Magic Fibo. And do we need to come down here to bounce before we even go higher? I don't think this is the end of the run, that this is Elizabeth, I'm coming to join you, honey, and the markets are going to crash here. But I do think when we reach that 7,000, we're due for a bigger retracement. So far, so good. Everybody with me so far? So watch this closely. Off of this low to that high, we close below that 618 right there, this green box, basically close below this swing point or even that swing point. Now that we got a new wick, we close below this little green box, candle body wise. Then it sets the tone. We're making a new low. And by breaking this low, sets the tone. We come and visit the Magic Fibo. Amen? So if we take this move, and I'm going to remove some of these and say, what are we looking at? We got nothing but lines and colors, and I don't see what you're talking about. From this low to the current high, which is that high right there, use your control key. That'll lock it to that point, giving you the exact top. So from this low to that high, look where the 618 is, about 6,700 area. Another almost 200 points. Is that in the cards? We close below here. It sets the tone. We're going down to 67. So that gives us 100 plus points. And we close below that, then it sets the tone. We're going to go visit the 618, 786, which I'm moving the target now because we got a new swing point high up there. This would be the main support zone. And look what's setting up. What a thing of beauty, Mr. Toussaint. From that low to that high, we're due for this. Again, we see a candle body close below this swing point, set to go down 100 points. I like it. We close below that swing point, we're set to come down and test the Magic Fibo. Now, this could kind of chop and grind and take weeks. It doesn't have to do it in a day or two. This is sloping upwards. All of this big run up, Magic Fibo is upwards. So the trend is still up, but the correction likely needs to come down here to bounce before we even go higher. So two things. I don't think we're done. I do think we're going to make another all-time high, but I do think we're due for the bigger retracement. And I kind of said that 7,000 was the area in which I was looking for that retracement to occur. And we got pullbacks along the way when we talked about some of these, but why are we looking for that bigger pullback? Now, maybe it matches this one. Maybe we get a similar type of pullback, which would roughly, based on that size. So there's many tools you can use without physically doing it. And one of them is like this arrow. You can come up from here, this high, to this low. And then if we do a duplicate of that move, now I can move that arrow from the current high and look where it's running into. If we do this similar type of retracement we did back from October to November, we do a duplicate one of those, that would put us right around that Magic Fibo, right? See it? Thing of beauty. So all eyes should be on this green box right around that 68.60 area. We start closing below 68.60. That would mean a candle body, meaning the candle body closes below 68.60. Then it sets the tone. We're going to go visit 67.70, so about that 100 point. We close below that, then say hello to my little friends at the Magic Fibo. Now, again, the reason I'm bringing that up, it is sloping upwards. This thing could chop in here, could drop down very quickly. Maybe we get the 66, 65 area. Or it kind of chops and grinds and this thing keeps sloping upwards and we kind of meet in a road around that 618 retracement up here. And maybe we meet around 6,700. Either way, we're talking shortage of somewhere around 1 to 200 points. And it sets the tone by closing below 68.60. Got it? Shoot for 100 points. Close below that, we shoot for another 100 points. So maybe we need this correction to then bounce to make that new all-time highs again. And the reason I warned you, even though ES did make a new all-time high, was based on the NASDAQ. NASDAQ is not making new highs. Right? So far it is not. We topped out here in October of 25. We got the correction and we made lower highs, lower highs, lower highs, where ES did go on to make new highs. NASDAQ has not. So how do we need that bigger correction? Again, when all these start setting up, why am I interested in those going lower? Because you come over here to the software and we look at, you want to look at the S&P 500 first. We go over here, let's go to a monthly. Monthly's in overbought territory. Weekly's in overbought territory. Daily's in overbought territory, starting to turn down. So this is why I expect that correction. We already got the trigger on the daily. We're getting a position trigger right there, starting to get one on a weekly because it's starting to hook. See it? The monthly hasn't given it yet. No, there it is. It is new. So there's your position trigger. This is a good opportunity to short this thing and be in a position of authority. Let me see what my property settings are. All right. So we can come up here and bingo, click to short. And I'm going to move these just to give it a little wiggle room. I'm not looking for doom and gloom, Harold, but I'm just looking for a little downside pressure with the daily pushing lower, a weekly turning over, and a monthly beginning to feel the pressure. So I can move this off to monthly, give us a little wiggle room on that, and look for this thing to push lower in the coming days. And I'm looking for on the smaller time frames. So I'll come to the daily on the smaller time frame. I'm going to move this up just a touch, go back to where the recent high was, and I'm going to look for this position to move lower in the coming days. Hey, we're up 125, 140 pips. Should we close it? Daily's expected to turn over, push lower. Weekly's getting started. And this is just corrective. And we haven't officially hooked and crossed yet. Like the last time we hooked and crossed on that weekly, what happened? The daily gave us a nice little push lower. That's this price action there. So what did the daily do? Harold, the last time we got a weekly hook and cross, the daily gave us that push lower and the daily cycled, right? See it? So we're going to end up getting this daily finish the cycle. High probability it looks that way now, but I still want to see current price action tell me and dictate. That is, right now on this, we need to close below this level. We close below it, it's inevitable we're going to go lower. Right? That's NASDAQ. And look at ES, same thing. We want to close below this area. We close below this green box, game on, we're going to go down 100 points. And we break that, we go down like another 100 points. So this is looking good for some more downside pressure. Amen? All trading involves risk. Prior results is not indicative of prior history and results. It's not indicative of future results. You know, the sole saying, the disclaimer, but this looks good for a bigger pullback. All roads are leading for that bigger pullback. Monthly overbought, weekly overbought, daily overbought, starting to push lower. Technical picture, we close below this green box, set to go visit the next swing point low, which again is about 100 points. And we close below that, opens the door for another 100 points. So again, I'm not looking for this thing to go plummeting, and Elizabeth, I'm coming to join you. It's possible something could give, but I'm looking for a bounce and even another push to all-time high, but we need a correction. We need some depressurization on those charts. Again, NASDAQ kind of set the tone by not breaking out when ES went on to break all-time highs after that October low. I mean, high up here. We went on to break all-time highs. Look at NASDAQ. That same October high, we haven't. Kind of bogging in this zone. So again, we start closing below this green box on the NASDAQ, doors ajar to come down here to 24,000 and change. This one too is sloping upwards. And here's my low to high. And actually that went just slightly higher. So let me move that. So use your control key, move that to the current swing point high. So we can see where that 618 is still this green box area. So it's still, there's not much difference in those, but the same area. So this looks like a great opportunity for the NASDAQ to pull down here to bounce to then trigger the extensions toward the upside, basically 27,000, maybe 27.8. Bubble hunting up here we talked about for months and months, need a correction. And the same as with the software. It's ditto the software. Come over here to NASDAQ and looking at the NASDAQ. Right there. Right there, we got the monthly overbought, got the weekly overbought, and a grinding, and we got a daily starting to depressurize, just like the other one on ES. So this looks more conducive to any rally should be sold in the short term and look for some downside pressure. And maybe we get to visit the Magic Fibo. And if we visit the Magic Fibo, then we can look for a buy the dip. All right. So I still think we're going to get some all-time highs before we're done. Before we get the Elizabeth, I'm coming to join you in a much bigger correction. But we're due for this. Monthly's exhausted, weekly, daily. I typically, even though Harrison people say, well, I went long and I made 100 points or whatever, and woohoo, I'm so smart. Well, it's a conducive not to be going long when monthly, weeklies, and dailies on the software at extremes. And what did I say in the class lineup? I said last week, markets are choppy. Use the take aggressive profit method here. Use the tap. Whether you're short or long, you need to be aggressively taking profits in these choppy conditions, because I was expecting a pullback on that. Fair enough? So, where are we going with this? Actually, I need to pull that back up. Where we're going. Watch force price to prove itself. We close below 68.60. That's kind of setting the tone. We close below this swing point green box, set the tone. We're going to go 100 points lower. We close below that, sets another 100 points. So basically, we're highest probability setting up a visit toward the Magic Fibo. That would be ideal move. High to low, we went to the extension. We come back to Magic Fibo to continue the upward surge. But that's what I'm looking for, deeper retracement. NASDAQ, same thing. This one did not go on all-time highs where the ES did, but the monthly, weekly, dailies in overbought territory. We close below this green box here, sets the tone. We're going down the Magic Fibo. So in the short term, again, use the same tap method. Well, I bought on the lower time frame. Why is this thing bouncing as we were coming into overnight? The markets were closed yesterday. The futures market started to push lower. We come in here. The bulls are buying the dip. Does that mean we're ready to go breaking out? Maybe. But in the short term, the monthly's overbought, weekly's overbought, daily software's pushing lower. Where did this bounce come from? Go over here to the software, and we can see where. You see how the daily's pointing down. What's reversing? 4 hour. The 4 hours, what's reversing? Got a little trigger long. It's bouncing a little bit, but the probability we start cycling and break out low when I have a weekly starting to turn over down, we got a daily pushing steep slope angle separation down, and my 4 hours turning up. We're likely going to slingshot lower here, and we're going to make the lower high, lower low. So based on the software, based on the technical picture, based on how we need a bigger correction, any rally should be sold in the short term. And if you are in a long position, so, well, it bounced. I'm so smart. I outsmarted the markets. Well, we were down, look at the low here. We're down 300 points for the day. That's from the futures market. And the low was down at 25, and now we bounced 300 points from that. So we were down well over 600 points, and we're bouncing a little bit. But don't think this is ready to go breaking out. Monthly's overbought, weekly's overbought, daily's pointing down. I'm looking for that 4 hour to start slingshotting lower. So any rally in the short term should be sold. And if we do close below, which this is the swing point right there, and we dip below it, but we're back above slightly. But if we can close below that swing point, this green box, we're going down. So I think we have a much higher probability we're going down in the markets. Fair enough? And I don't mean doom and gloom, but I mean it's likely we need to visit this Magic Fibo before we can get some new all-time highs. Amen? Only one that looks more bullish is the small cap. Look how this thing, even when those other markets was down 600 points, this thing's barely down. And even earlier, it was only down a small amount. So we reached up toward the target. What's the next target? Well, again, we got confluence of events. I said it last week that keep buying the dips. When we bounced off the Magic Fibo, this is why you need to have this. Get the Magic Fibo bounce, this thing moves. Get the Magic Fibo bounce, this thing moves. So definitely be in a position of authority on this run, but this could set the tone for IWM, start pushing toward break above our swing point high. Then we got a 273 target, a 278, 281, maybe up to 290. This is still looking pretty bullish, but be careful that when the big correction comes, this thing maybe goes up a little bit more. You look at the Russell as the big one. We got a little bit more to go. We didn't quite reach the 1618 on this, up around 2730. So if we continue this rally toward 2730, or maybe the next would be this 329, almost 3000, we get up here, I'm looking real nervous for this thing for the big move. It could happen sooner, but this thing looks still bullish, even though the ES and the NASDAQ look like they need to pull back. This one still looks like it's got a little something left to the upside. Then look for it to correct. Fair enough? And what about global liquidity? I like the Nikkei. Nikkei global liquidity from the recent high to low, we reached the extension. We may need a bigger pullback on global liquidity to match ours. I can say one thing with a high affinity for a percentage that it's going to play out is if we get this pullback down toward the Magic Fibo on the Nikkei representing global liquidity, it's going to pull our NASDAQ down. It's going to pull our ES down. Got it? So this comes down to the Magic Fibo. Rest assured, NASDAQ's going to be down at its Magic Fibo, and ES is going to be down at its Magic Fibo. Amen? So do I think this is the end of the end and this is all market crash? Elizabeth, I'm coming to join you, honey. No, I still think global liquidity is going to go higher, but we need that pullback. Any questions? Any questions? So this is a nice little pullback. We take out this swing point low, which right now this is looking a little bit more bearish. Why? Notice where we broke out from, if we get a candle body in the recent rejection from that high to the breakout, we close below this, not that wick, but the candle body starts closing below here. It sets the tone. We're going to come visit this swing point. Everybody with me? And we don't hold that, then it says hello to the Magic Fibo. Any questions? So today's price action, are the bulls going to, and even global liquidity, are they going to buy up this? Or we're likely going to get more downside? At this juncture, we close below that swing point on the Nikkei, which we're below it right now, but that candle's not over. If it closes below there, it sets the tone for a bigger move lower and potentially visit the Magic Fibo. All right? So be careful. So in my humble opinion, and that's all it is, no buy, sell, the whole recommendations. But in my humble opinion, based on the software at extremes and the monthly overbought, weekly overbought, daily overbought, pushing lower, a little 4-hour bounce where the bulls are trying to buy a little bit back in the futures market off of the big sell-off. Be careful. I think it's got more downside. And if this baby closes, below this swing point, which currently the body is, but if it closes below there, Harold, then it sets the tone. We're probably going to come visit this swing point. And if that doesn't hold, say hello to the Magic Fibo. And again, under my humble opinion, if we get down here on the Nikkei being global liquidity equivalent, then there's no way NASDAQ is breaking out. It's coming down. And there's no way ES is going to go breaking out. It's coming down. Now, if this reverses and pushes higher and the NASDAQ closes above and starts pushing higher, then sure. If this runs higher, then yes. But notice, even when this went breaking out, only the ES followed it. From that October high pullback, NASDAQ did not break out. ES did, went to all-time highs. And you could see the Nikkei global liquidity did, but NASDAQ, the big tech, did not. So that kind of sets the tone. We probably need a bigger correction across the board. Amen? And again, I'm just going to say it. If this continues to decline and we make a move down in that 47,000, 48,000 area, or even 49, 48 plus this area, we continue to decline, it's going to pull the NASDAQ down toward its Magic Fibo, and it's going to pull the ES down toward its Magic Fibo. Got it? So just to reiterate that, what does that look like? ES, we close below 68.60 for the day. Anything can happen. By the end of the day, we could be closing well below that. If it closed below 68.60, look for about a 100-point decline toward that 67.60 area. Close below that, come visit the Magic Fibo. So if Nikkei closes and start pushing down toward its Magic Fibo, no question, ES is going to go toward its Magic Fibo and might go towards its extensions even a little bit lower. Got it? And if the Nikkei, again, starts pushing and closing below this level, pushing lower and pushing toward its Magic Fibo, not only does it pull ES down toward its Magic Fibo, but it's going to pull the NASDAQ down toward its Magic Fibo and maybe toward its extensions lower. Amen? All righty. So I'm not doom and gloom. Still think we're not done to the bubble hunt over to the upside yet, but this is overdue for that correction. And the software is in agreement. The technical picture on this is an agreement because, Harold, looking at my ABCs 1, 2, 3, this looks like an A. This overlapping chopping looks like a B. And we're likely going to come down here in a C. And if Nikkei pushes toward that Magic Fibo, it's going to push this one down. And right now, the NASDAQ, this candle body's holding on. But if we close below, it sets the tone. So right here, we break this low from where we kind of rally to bounce off of. We close below and break that low, it's over and we're going down at least to the Magic Fibo. And again, the Nikkei pushes toward the Magic Fibo. We're definitely going to go here and probably even start shooting for these extensions down here around 23, maybe 22 area. Okay? All right. And all roads lead to more downside, so be careful on the bounce. But that's why I said here, use the tap method because the market's going to be choppy. And be sure if you're trading short, you're trading long, you use aggressive profit taking. And don't expose yourself unnecessarily. Be extremely careful. This thing is likely to go lower, in my humble opinion. All righty. Let's continue. What about our setups? We hadn't talked about Apple in a while, but last time we did, we said likely coming down to the Magic Fibo. We're there. So if you discussed and took this Apple to the short side, Emil, and others, if you might have taken that, be in a position of authority. This is a good time to take profit. Yes, it could go lower. If our markets go pushing lower, tech goes lower and pushes to the Magic Fibo, and the ES pushes toward the Magic Fibo, and our Nikkei global liquidity pushes down, this will probably still go lower. But this looked like the move we were looking for. Is it over? I mentioned if we break the prior swing point, couldn't hold it, next stop would be the Magic Fibo. We start taking the Magic Fibo and this swing point out here, then we could even come lower toward this big pink box. And where would I expect Apple to be if the Nikkei goes hunting the Magic Fibo, which we're already here on Apple? But if the Nikkei global liquidity goes down there, we pull NASDAQ down to its Magic Fibo, and we pull the ES down, this is likely going to go visiting probably that 230, maybe 220 target. Amen? Be careful. We could easily bounce off of this, but if we break below the Magic Fibo, next target is probably around that 230, 250. Fair enough? Tesla. How about Tesla? Or as President Trump said, Tesla. It looks like we maybe get another little dip. I'm still looking for Tesla or Tesla to go ripping higher in the 26, 27. Maybe it takes a little bit more time. I still own TSLL. We've been buying it and taking profits, getting and buying, and cost amortization along the way. So dollar cost average, this pushes lower. TSLL is going to go lower. But Emil, back when we bought TSLL, it was months ago, and it was down here in the $6 range. So could we go lower in this? Yeah. But remember October of last year when I made a bold statement? I said Tesla is going to run toward 500. You might consider TSLL leveraged, and it was below 10 right there in October, October 24th, right there on that day, right there on the 24th. I said it was below 10 bucks. It would make them run up. You would consider it. And I'll show you here. I've done it before, but I'll do it again. Go back October 24 of 24. Expect Tesla to hit 500. Consider a TSLL trade. If you'd have participated, no buy, sell to hold, but if you'd have participated in that, that baby went ramping to from below 10 bucks up to 41.54. Not too shabby. A quadruple. Not too shabby. Then on the pullback, I'm still expecting Tesla to make a run toward its probably that 550 to 650 range, with that options that people have been playing up toward 800, even 900. If this thing gets a big rip higher, then we could talk about maybe getting up here in the bubble in the $50, $60 range for TSLL, even breaking the prior high. But we talked heavily about starting to buy as we're starting to get in the buy zone. And I said, as Tesla goes lower and TSL goes lower, keep adding to your position. And I loaded up the boat right around here, and we had another triple in there plus. And now I'm still expecting a pullback. If we get the bigger pullback in the markets, this will pull back and sets up next big push. But if Mr. Tesla goes up to that 556, 50 range, we should at least be in the 30s. That's a double from where we are. And as we pull back, maybe even more. And if it goes ripping past that and pushes toward 900, then no reason to believe we won't be up here in this bubble in the $50, $60 range. And that's over a triple right now. So again, I can't tell you what to do, but back in October of last year, it worked out beautifully, took profits. And before that, we're loading in. I'm still in it. Yes, we get these big runs, Emil. I just have a thing. When I own something, even though I think it could go much higher, when it doubles or triples, it's just wise. You never go broke taking profits, to just take some profit off the table. And the profit you make, you get a big pullback on that. Then I buy and add into the position for the bigger move. But I did make a bold statement, not a prediction. I use that to the profits, the predictions, but everybody and their brother predicts and does, but I don't. But I did make a bold statement that minimum, even if this thing is a dud, it's going to get toward the 30s. And we got as high as the 20s, mid 20s, but we didn't quite get to the 30s yet. That's why I think we're still got more upside. And I do think Tesla is going to go running. But be careful, we could come down and bounce or even make a lower low here, clean this up, make a light lower low. But the longer term, I want to be long. And why do I still own this? Yes, I sold them, took profits, and I took that profit and bought more. And I'm still in a position of authority on these, yes. But why do I don't mind holding some of these after these big runs? You take profits, you get a dip, you buy more, you hold them while we're chopping, expecting more upside. You get dividends. A little chunk of change here, a little chunk of change there, chunk of change, 57 cents. That's not too shabby. Chunk of change, 11 cents. Yeah. So it's kind of like what we call Louisiana lagniappe, a little something, something extra. So while I'm long, holding shares that we've made big money on before, expecting another big move in the weeks, months, maybe it takes another year, we'll see. But this is still expected to get up here. And if Tesla can run and break out And why am I so confident Tesla's going to go higher? Because I said so. Is that not enough? No, but the technical picture. Go to Tesla. What have we learned from the recent high to the low? Tesla broke the 618, it broke the 786, and we still got 530, 560, and the other extension up there, 650. So this is why I definitely think we're going to 550, 650 range, highest of highest probability. And by ripping up there, that's over 200-point run. What if Tesla makes a run? And we kind of showed you with this little growth pattern here. We use this tool called the date and price range. And we say, well, what if we go up toward 800 range? That's 100% gain. Well, we're actually moving lower. So it would be more than that. So I'm going to move this down. What if we just make a run toward that 650 target? And then take this low over here. I got some things in the way. So I'm going to move this out of the way for a second. I'll show you those targets again, just so I can get a hold of this. Take my little support box out. There's the bottom of that. And what if we come down here to the Magic Fibo to bounce again? And we only go to, say, 650. That's a good 66, 65% gain. So you go to TSLL and you do the inverse of that times 2. That would be 130+% gain. And that puts us about 40. And what if we go a little bit lower? Well, if Tesla goes lower, this is going to go a little bit lower. So yeah. So what if we do that? What if we come down another few bucks and we say come down about $14 range? Tesla pulls back, this pulls back, and we only do that 130+% gain. That puts us right at our minimum target. So no matter how I slice this, I'm very bullish back in October last year in 24, or actually a little bit over a year now, when that happened. And since this pullback, we've been holding this. So look at the dividend checks you made, 8 cents, 9 cents, 8 cents, 9 cents again, 57, 58 cents there, 11 cents there. We do have earnings coming up, etc. Again, some more dividends with Tesla. Tesla earnings is next week, I think on the 28th. Yep. So what's probably going to happen, what I was looking for Tesla to do, Ian and Emil, what I wanted to see, I was hoping Tesla would start grinding higher up into earnings, then get a pullback on earnings to then go bouncing post earnings. But this is making it look more like going into next week's earnings, we're going to pull back. Then post earnings, we might get the bounce. That's just typical of Tesla idea. Earnings typically get a dip and then we go rip. Well, if we're dipping into the earnings, then we typically bounce. Needless to say, I am very bullish on Tesla and TSLL. Got it? So even though I'm warning you, we're probably going to get a bigger pullback, I'm going to add to my position looking for that bigger bounce to come, because these targets are got a 75% clip to go higher, and it might take another. That's why I buy shares, right? Buy these and hold them. So you don't have to worry about expiration. A lot easier to do that than say, well, Gary, you were right. Tesla got to where we needed, but my options expired and I didn't quite make what I was looking for. And I might even lost money, even though Tesla went up. Expiration got me and I didn't make it. Well, owning this, it doesn't matter if it's this week, next month, next year. It gets to these targets. This baby's going much higher. And while you own it, you do get a little something, something. I don't mind owning that. Amen. All right. Talked about Meta setting up. Got another pullback. Didn't like to see it. We're probably going to go to low, but I already nibbled. I made a small little nibble here. and I'm looking to add to my position. Because I do think in the long term, Meta is going to go ripping higher again. Here's the bigger picture. And showing METU hasn't been around that long. But when Meta rips, this thing rips. Last time it was below 20 or around 20, ripped up to 51. And we're getting a pullback again. So I'm looking for what? This to go higher. Meta, I do think. You look at the bigger picture on Meta because it's definitely been around, but the leverage product hadn't been around that long. It just kind of grows, get big pullback, it grows. So I'm looking in the long term. What is long term? 150 years from now. No. I'm looking maybe the next year or two, maybe by 27, maybe by 28. This correction could make a lower low still. Doesn't mean it's over. But I do like the bigger picture. It's kind of still holding that 618786. But longer term, I think we're headed toward that 1100 to 1300 bubble. Is it going to get there by the end of this year? Possibly. Could it be 27? Could it be 28? I'm definitely looking for more upside. So in the interim, I like leverage products, not always just use options, because again, if your timing is off on option, I'm not trying to downplay option. I trade options a lot, but the timing has to be right, where you can get a little more leeway with doing a leverage type of product. And if Mr. Tesla can run up to that 800 range, TSLL is going to go zooming toward that $40 plus range. And if Meta can make its run, which I believe long term we're going to do Meta up to around 11 to 1300 range, then this METU is going to go skyrocketing as well. Amen. So I really wanted to see a more aggressive bounce off of this, but the bigger picture in the markets say going, and it doesn't mean, well, Gary, if the NASDAQ pulls back and ES pull back, there's no way Meta can bounce. Sure, it can. Individually, it can, but it's probably going to pull back even more, and I'm just going to add to my position. So what are some logical targets if we do get the bigger pushback? 24, 23, maybe 20. So I nibbled a little bit. And if we start pushing towards 20, I'll probably buy a little bit more. We push even lower, we'll buy some more, because this is not a buy and hold for next week, buy and hold for next month. This is a buy and hold and look for a much bigger move into maybe the end of 26, maybe 27. And again, while you're holding like TSLL, you get a little something, something. 22, 20, 25, right? It doesn't hurt you to hold this while these things can double and triple as we move forward. Amen. And what if METU does do a big move, because we make that move up to 11, 1200? That would put us somewhere around this $80 range. Looking at Meta. If Meta can make the run, I think I had this on let's do a weekly chart. Yeah, there it is. If Meta can make the run up here toward that 1100, 1200, and again, we need to adjust this slightly, right, Harold, because we're making some new lows in here. So this thing we need to come down. Maybe we come back and retest the Magic Fibo or something a little bit lower. But for the moment, while we're in this zone, here's where we're kind of hovering price right now. And if we make a move toward 1100, split the difference toward that 1100 zone, then that's roughly 100+% gain, right? 600 to 1100 ish, like 100% gain. So what does that do to METU? That gives us a 200% gain. And we go 200%, that would put us up somewhere in the, if I can get it to stop, somewhere around 80 plus. Not too shabby. So again, no buy, sell, to hold recommendation. I cannot tell you what to do. That's not my job. You need a certified financial planner, And again, you can see I can pull this down a lower time frame and see where we actually are. So there's where we stand at the moment. And we still get that type of move up. Then that would move us down just a little bit, right around a 200% gain. That still puts us right around 80 bucks. That's a big assumption, right, Emil? How do you know it's going to go to 11, 1300? Because I said so. The technical picture says Meta will get to 11, 1300. Even if with a bigger pullback, that just sweetens the pot because I can get these at a lower price. So we start breaking down in the low 20s, which is likely with that pullback with NASDAQ. And if we get the Nikkei to break down and ES and NASDAQ can all pull down, I'll probably pull this down a little bit more as well. So the lower METU goes, the more I salivate to buy more shares for the year, maybe 2-year trade. And what do we get in a year or 2 years? More dividends. More dividends. Amen. Next dividend, December. Well, that was December 25, but you get the point. You go out here on the daily chart. You can see those dividends on METU. I mean, they pay. That was back in June 24, September 24, December 24, March 25, quarterly bonuses, it looks like. June, September, December. Got it? So what's next one? June, March, then June. That's quarterly dividends, it looks like. So there you have it. So what if it takes me a year or two? Then I'll get 4 to 6, 8, maybe little dividend pops in addition to the stock price rising over time, in addition to this multiple 2x leverage going hotter, pushing. Right, you get the point, but that's it. And last but not least is Mr. Amazon. Amazon's turn to get a little something, something. And coming in on the Amazon price action, it too has already set the tone, even though we're pulling back, recent high to low. We took the 618 out. We're probably, I would not be surprised to come back down and visit this. But I do think Amazon has more upside long term. And I don't mean decades, but certainly. We're coming into earnings as well. Maybe we get a big earnings pop out of this. Let's see when the earnings are. It too is the Thursday the 29th. So that's next week as well. Do we get some pops on earnings? We shall see. Last earnings, what happened? We beat expectations. And what did Amazon do from earnings? Nice pop and run up. It went from roughly about 224 to 258. Nice little pop. Are we going to get it again? Yeah, these targets are high. 264, 270, 75%, 70 plus percent. And what if we just get that small move short term? We're not talking years on it. Small move, we're talking somewhere about a 15, 16% pop. And what does the AMZU do? With about a 32% pop, gonna adjust that to where price action is. We're looking at about 47, 48 bucks. And we're buying at 35, not too shabby. Nice 30% gain or so. Could it be more? Yeah, I think long term, Mr. Amazon's going to go much higher like Meta, big term picture. Short term, could we get up here? Maybe. Amazon's going to have to go popping, but yeah, we could get up in the 40s and the 50s. And again, while you're holding it, you get a little something, something. I like it. A little something, something. $1.20 on that one. How about that? So that's kind of where I'm leaning to. Some METU shares, some AMZU shares, some TSLLs, and looking to buy dips and looking for more upside while we're holding, we get a little something, something on some dividends. All righty, what else? Black gold Texas tea. And while this craziness is going on, gold continues to rip. The more of this potential war with Iran and this, that, and the other, and the 38 trillion and the craziness of the protesters and so-called peaceful protesting. It's insane what's going on. And gold continues to rip. Be careful. Yes, we're going to get a correction. The gold train will eventually stop, but this is making it look like we're going to run toward that 5,000. I thought we'd get a correction before then, but if this keeps up with all this insanity and a big market crash and all these things that are looming, people are going to keep buying gold. So this should continue the train, but just be in a position of authority, because I do think gold's going to go higher, but I wanted to start with black gold. And this is looking like this latest move is three-wave correction. Harold, what happens after a three-wave correction? Downside, right? Still think we're going to 50 and lower. That's in the cards until price proves otherwise. And what do? We did a three-wave correction going into the Magic Fibo, and we got rejected. Now, what if we break above the Magic Fibo and close above that high? Then it can start putting pressure on the markets with inflationary pressure. That's all we need to add is inflationary pressure to what we already have. So that's one way to get out of our debt. Remember the U.S. debt clock? Not a pretty picture, my friends. 38 trillion running toward 39 trillion. Wow. Insane. Insane. So could this be, how do we pay this off? One way is to let inflation get way out of control, inflate the dollar to the point where it's worthless, and then this debt will be nothing, right? 38 trillion, we can throw that overnight. That's one way to get that in perspective. But what's interesting is a comment was made, whether you believe it or not, Ripley's believe it or not, if we can get rid of the fraud, just the Somalis in Minnesota you've been hearing, they've been ripping off Medicare. It's not just Minnesota, it's all state, ripping off Medicare and children, schools, teaching, all that. They have daycare centers and they don't even have a business. They supposedly transporting people for their medical transport rides, all the Medicare fraud, all the stuff that's going on. If we got rid of all the fraud, we wouldn't have a national deficit. All the fraud that's out there. I digress, but the fraud out there could pay all this off if we were no longer having that fraud. Decades and decades and decades. And then you look at Miss Elon Omar or whatever her name is. She's being investigated because she's supposedly made $33 million this year. You don't think she's dipping into some of that Somali money up there in Minnesota? Again, I digress, but who knows what's going on? But how does someone making less than about 100,000 all of a sudden make 33 million in 1 year? Wow. That's why people go into politics. That's why they run until they're 150 years old. They don't want to get rid of that teat. They got that teat where they get all that money up there. Again, I digress, but Harold, this is why gold continues to go higher. That is not good. And you look at the deficit where we're bringing in this and we're spending that $2 trillion deficit, where you're spending $2 trillion more than you're making. Houston, we got a problem. That's why this thing continues to climb. What does that got to do with oil prices? Well, if we start seeing oil surge, it's not going to be good. I think oil's on that one. Yeah. So be careful. I still think we're going to go lower, technically speaking, But if we start breaking back above and start pushing into the upper 60s and 70s, you start pushing beyond 60s toward 80, you get anywhere near 90, that's when the inflationary pressure and all cost of goods and services is going to skyrocket. So this is very critical zone. The technical picture says we're more likely after a three-wave correction up, more likely going to get a push lower. And the bigger technical picture I've talked to you for months on is that from the recent 130 high, we've been in a downtrend. Ever since that 130 high up here, we've been correcting. We got a big pullback into May of 23. We bounced, overlapping, chopping all of this time during that period, starting to get the series of lower highs. I made a bold statement, again, not a prediction, but a bold statement. We were going to get to a new swing point low. We needed to break that low and make a new low. That technical picture screamed we needed a new low. We got it. What happened when we hit 55 that first time? Rockets went off in the Middle East, shot up to like $78 from 55. Pop. And now notice this price action. We came down, we overlapped, chop, grind, higher low, lower high, kind of grinded. We needed a new low, but all this type of overlapping price action stated we needed what? A new low. Now let's zoom in on the more recent price action. Since that new low, what did we need? Since this new low, we got the same type of movement, don't we? We kind of chopped and grind, went up, made a lower high. Sound familiar? Then we proceeded to make lower highs, lower highs, lower highs, lower highs, lower highs. And we hadn't made a lower low over here yet. We did make a lower low there. So all this grinding, grunting, overlapping movement still looks corrective. Corrective against what? The prior down move. That's why more than likely, Harold, like I said over here, when all that was transpiring, we needed a new swing point low that we finally got. And all this chopping, overlapping, grinding action says the same thing. We still need another new swing point low. And when we take out 55, this next go around, I think we're going to go down to 50 and lower. And you know the plan, we have a plan of action. And it's instantly set. I hear that Black Gold Texas Tea, the Beverly Hillbillies, is at $50 or lower. My instant move is going to be buy UCO. Amen? Why buy that? Because when oil prices get to 50 and lower, the lower it goes, the more violently it should bounce. But then it should go ripping higher like the last time we did what? 55 to 78. What should UCO, which is a leveraged product, rip times 2. So the plan is as oil prices get 50 and lower, I'm buying UCO. And UCO, when oil then pops, maybe rockets go off in the Middle East again. Maybe we get, whatever the reason, drill baby drill cannot perform down at these low prices. They need prices to be in the 60s, and between 60 and 80 is kind of the sweet spot. So if we can get down to 50 and the 40s, and we got to get to minimum 60s to 80 range to be in a sweet spot, that's quite a nice bounce, no matter how you slice it, on UCO. Amen? Any questions? So what am I looking to do? Oil prices hit 50 and lower. I'm going to be buying Mr. UCO down here in the low teens, mid-teens. And Harold, anything 15 and lower, I'm buying. Maybe even at 16. Depends where price hits. So what happens? You see CL, which is Black Gold Texas Tea, it hits 50. What if UCO, when oil hits 50, UCO is already at 15. I'm buying. What if we hit 50 and oil prices go down to 45? Then we're going to get the leveraged, same thing. It is a leverage ultra share. So it cuts both ways. Oil prices decline, this thing declines times 2. Amen? So if oil prices dip to 50 and lower, this thing could be not only in the low mid-teens here, we might even dip down into 11 or so. Get out of the teens and below. What happens if I see price at 10 bucks, 11 bucks, 12 bucks? Add. Buy more. Gobble it up. Because I can assure you, oil prices are not going to stay at $30, $40, $50. They're not going to sit there for very prolonged periods. Oil has to be in the 60 and above category in order for drill, baby, drill to work. Amen? Everybody with me? So in the short term, wow, this could be the breakout early, and maybe this new little swing point low there is it, even though we didn't quite reach the new swing point low. And I know I'm on UCO, but oil, even though we didn't officially make it the new low there, we came very close to it. And maybe that low is enough to warrant this thing breaking out. But technically speaking, this chopping and overlapping still looks like we need another push lower. And ultimately, you zoom in on that. That looks three-wave correction, so likely we're going to get another push lower. Bottom line, in my humble opinion, oil hits 50 and lower, I'm buying UCO. Can't tell you, no buy, sell to hold, can't tell you what to do. That is the plan. And then when oil go ripping back in the 50s, 60s, and potentially, this is what I like about it, from that recent 130 high to this low, what if, Harold, we get this push lower into the 50s, maybe 40s, and then this thing goes ripping back and we simply do a 50% retracement off of the high to whatever the low is. Or we go visit a 618. What if we go up to that 90 to 100? That is a massive move higher. You're talking somewhere around from where we are, get down into the 50s down here, maybe 45. You're talking 112% rally to get up to near 100. What would that do for UCO? That would be over a 200% gain, and that would put us up here in the mid 40s. So we get down into the teens and we get to the mid 40s, that's a triple. I like it. Okay. All righty. Let's finish up. So gold and silver are still going to pop while these horrible conditions, but be careful. We could instantly see a big correction. It's due. What do we know about the psychology of a market cycle? You don't go parabolic forever and you ultimately crash. Remember when everybody last year or so was so high on SMCI, super microcomputers? Man, this thing is ripping. And this is, they did the splitsy and stuff before they did the splitsy there, 10 for 1. It was up in the thousands, right? So this has readjusted the price. But you remember super micro, right, Emil? It was never going lower, man. Even your laundry service and your whatever services and your yard service and the butcher and the cleaners lady and everybody said, we need to get some SMCI. It's going to the moon, Alice. And what happens after the psychology of a market cycle? It comes plummeting back down. So is that going to be silver? Yeah. All markets do this eventually. And the more this rips, the more higher potential it has, extremely high probability it's going to give a 50% retracement. Ouch. So is it today? Is it tomorrow? Do we get to a 90? Do we get to 100? Who knows when it's going to end? But this parabolic move does not last forever, and you will get a big pullback. And after the big pullback, what am I going to do? Buy. We talked about buying silver. I said the beginning of 2025. that silver is underperforming. It's going to go ripping to catch up with gold, and it's due to rip. And I made a bold statement way back, and I said it was going to make minimum $60 to $70. Guarantee. I guarantee. We've surpassed that by some. So am I trying to tell you silver is done? Stick a fork in it? No, it'll probably go higher, but we're still going to get a big pullback somewhere along the way. And when you do get the big pullback, don't be shy on buying up the dip. And we're talking at least a 50% decline as this thing goes parabolic, like you saw in that SMCI chart. And last but not least, Bitcoin is not looking good. Crypto might be in crypto winter. It's too early to call it, but this is not looking good. We need to hold this uptrend of highs, higher high. We need to uphold that, and we're testing it now. Start breaking below that. All I could say is we break 80, which is the swing point low, we're going to 75. And even if we get the big sell-off, I expect we're probably going to get a three-wave correction back up. Maybe we push back toward 100,000, and then we get the next push. Just a high-level overview, and I'll let y'all go. The reason I'm hanging on by a thread is the last halving cycle, we had a big rip, we had a huge decline, and then we still ripped to go all-time high. So is this similar price action? We're still going to get one more rip to all-time highs, or is this truly the beginning of a crypto winter and we go lower? Well, kind of like the gold scenario, black gold, we get to 50 and lower. I'm buying UCO shares for the big bounce to come. Well, as we move into late 26, maybe early 27, and we're at the bottom, like I called the bottom in Bitcoin in 22. What did I say? Bitcoin below 20,000 is a steal of a deal. It's the best McDeal you can find out there. You'll be sorry you didn't take advantage of it. Now we got iBit and iBitU and some leverage products, a lot of ETFs, which we didn't have previously. So there's many ways to play this. But when we start to get down at 50,000 and lower, especially if we don't go breaking all-time highs again, we get down to 50,000 and lower, that's going to be the next buying opportunity. Next halving is in 2028, and we're going to look for the big run, because one thing history has shown us, these blue lines represent bull runs, and these don't look like much, but Bitcoin made massive runs. You stretch that out. I've done this for you before, but you stretch that out, and they're massive runs 12 to 18 months post halving. I mean, we were down here in the dollar range and we went up to 1,200. Next crypto winter, you climb into the next halving. We did the next big run, and we went. I got to start condensing this back. Look at that run. Way up here, next crypto winter, we start rallying into the next halving cycle. Boom, shakalaka. That was the previous one that went up to 68,000. And this most recent one we're in. So what do we know? Every 4 years or so, we have a bottom on crypto. Every 4 years later, we have highs. So you buy low, sell high, buy low, sell high, buy low. When's the buy low? That was the 20,000 this past cycle. And we talked about that. And the next cycle, Harold's going to be when we're at 50,000 and lower. That's a time to start either buying some Bitcoin. You can buy $1 worth of $10, 100,000, a million, 10 million, whatever you got. You can buy some of those shares, or you can buy some leverage product and buy and hold on those. Yeah, it costs you a little money to hold, but when Bitcoin goes from 20,000 to 100 plus thousand, and over here we go from between 50 and 30,000 to a few 100,000 going into the next halving, which would put us out to like late 2029-ish. Do we rally one more time before the crypto winter? All I know is whether it's pay me now, pay me later, we rip higher first, then we get to 50,000 or lower, or I hear Bitcoin hitting 50,000, time to start buying a little something, something. shooting for 2028 halving, and then we go 12 to 18 months post that, put us in late 29, maybe early 2030. That's the plan. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Be careful. The markets are more than likely going to need more downside, even though we got the bounce. So I'm just circling the wagons. We closed below this 68.80, which we're getting closer and closer. That's why I warned you at the beginning of class that any rally should be sold in the short term. And if we start closing below here, 68.60, 68.50 area, we're getting in that zone. We start closing below there, then look for about a 100-point decline. We don't hold that low, then we go into Magic Fibo. But this is overdue. Monthly overbought, weekly overbought, daily pushing lower, 4-hour turning up for that little bounce, sell the rally, going to slingshot lower. And we close below on a daily candle today, look for more downside. And Nikkei, if it ends up pushing down and we close below that prior swing point, which we're dipping into now, we close below this now, we're likely going lower. We break that, we're likely going Magic Fibo. And again, all I can say is if this baby retraces back down here, ES is going to be at its Magic Fibo and lower. NASDAQ is going to be at its Magic Fibo and lower, et cetera, et cetera. And looking for this to go lower. So with that, we love and appreciate you. That's it. That's all. We'll see you tomorrow.